Hi, everyone, and welcome. I'm so glad you can join us today. My name is Natalia Paulino, and together we're going to break down one of the hottest topics right now in real estate, interest rates, what's really driving them, and what this means for both buyers and sellers. Here's a quick look at what we'll be covering today. Why the Fed funds rate doesn't actually dictate mortgage rates, how the Fed only makes changes 8 times a year, why mortgage rates often respond to economic changes, and ultimately what all this means for you if you're thinking of buying or selling. Now, I am thrilled to introduce my co-host, Jessica Coen, brand manager and loan originator with U.S. Mortgage Corporation. Jessica brings over 20 years of experience as a mortgage consultant with an underwriting background that gives her unique insight into the lending world. Her passion is helping clients improve their financial situation and guiding them on the path to home ownership. She's a true expert, and I'm so excited to hear from her today. Go ahead, Jessica.
Thank you, Natalia. Thank you for the introduction, and thank you to anybody that is watching this. I'm excited, and thank you for the invitation.
All right, so let's get started. Where do you want to start, Jessica?
So, yeah, let's just take something out of the way, right? Right off the bat. Because when the Federal Savings, with the Federal Reserve, now the Federal Savings, that's a bank. The Federal Reserve. When the
Wait, did I
Federal
say that? Now I'm not even sure what I said.
No. When the Federal Reserve cut rates, as we start getting calls and people think that their mortgage rate is going to go down by that amount. And we need to explain that probably that cut might affect mortgage rates, might
Right.
not affect them, not right away, probably in the long term. With this one that just happened, it happened that low rates went down as well, but it's not always the norm. And it doesn't mean that rates are going to go down the same amount that the Federal Reserve is cutting, because what the Federal Reserve is cutting will affect short-term rates like credit cards, personal loans, car loans, because it's the money that banks overnight are lending money to another banks, right? And the interest that they are paying for that money that is being lended. So mortgages are not correlated to that. But in this particular situation, yes, rates have come down, but they went up. So for the last couple of days, we are seeing that, yes, there was an improvement, but they have been climbing back up. So what that tells us is that rates are right now are like a roller coaster. They change on a daily basis. They react to the bond market. So they can change during the day. When the market is really volatile and we are seeing a lot of movement, sometimes you can quote a rate in the morning and in a couple of hours that rate is no longer there. So that's why it's important that you work with your mortgage advisor, with your real estate advisor, so that way you're ready to take the next step with the rates when you see a dip in the market. And yeah, so pretty much that's what I wanted to just clear in the beginning. So because people and then the media and a lot of information out there that might not be accurate or might be 1 or 2 days delay, if that makes sense.
Yeah, it makes complete sense. And, unfortunately, people just hear what's on mainstream media and they start cheering or they start holding off on plans or changing plans, thinking that it's going to mean lower interest rates for them, right? And
Correct.
I think that's why it was important to have this conversation, go more in depth in what it really means. That way, when I speak with my clients as well, like we are both educated, we know what's not necessarily to expect, but not going into a situation expecting or not expecting something, whether it's going to be lower interest rates or higher interest rates. Like you said, it's just kind of waiting to see what's going to happen day by day.
Correct. So that's why it's so important that you have your ducks on a road. Rates are unique to every client's situation. They are like your DNA. So my rate is not going to be the same as yours, Natalia, even if we were twins, because our
Right.
financial situation is completely different. There's so many factors that go in the rate. But the good thing is that, yes, we have seen improvement in the last 11 months. We at some point we hit the eights. We're talking about,
Yes.
yeah, we were there, high sevens, for a regular loan, like talking FHA, Fannie Mae, and definitely now we are seeing the sixes. In some instances we are seeing some fives. So for the last 3 years, we haven't seen those numbers, or unless you were talking about probably a buy down on the rate, or
Right.
or an adjustable rate, if right? So definitely the market has improved and is helping more clients to qualify for more money than a couple of months ago.
Right. When eight came into the picture,
Yes.
everybody freaked out. All right.
Yeah, yeah, yeah. But at the same time, I tell my clients, if the payment makes sense, if this is this house and this payment makes sense, just let's concentrate on payment. And what is
Right.
your strategy in the long term?
Right. Like,
Because
what does their monthly payments look like right now?
correct, what their monthly payment is gonna look. Same with refinances. People hear rates went down and everybody wants to refinance, but not refinancing is not always good. We need to take a look, a deep dive on your situation. What are you doing with this home? Sometimes I have clients that call me, well, I'm selling in a couple of months. I'm like, so why are you refinancing?
It
Right?
doesn't make sense for them.
It doesn't make sense. And also making sure, especially here in New York, that we have high closing costs because we have the mortgage tax. Although there's situations that we can do get away with that mortgage tax. There's a legal process that is called a SEMA, and that we use it for purchases and we use it for refinances to try to save money on that mortgage tax. But what we do with our clients, we try to just go into their particular situation and see if rates are where they need to be, where they make sense for them to refinance.
Yeah. Yeah, that makes a lot of sense. And then for anyone that was listening, you mentioned buying down points, right?
Yeah, an alternative. That's an
Can you
option.
talk a little bit about that? Because not everybody is aware that that is even an option.
Yeah, so pretty much when you are buying points, for example, very simple, because just to break it down very simple, 1 point is 1% of your loan amount, correct? That doesn't mean that you are going to go from a 5 to a 4%, because that's a common idea that clients have.
Misconception.
And basically what is going to happen is that 1 point can buy you a fraction of a percentage. So
Okay.
for usually between a quarter, 3/8 of a point, depending on how the market is doing. So that's why it's important that you have these conversations with, especially with your mortgage advisor. And hopefully that mortgage advisor is somebody that can have the time and has the knowledge to break it down to you and give you all the options that you can have. Because buying points, sometimes it makes sense, sometimes it doesn't make sense. Because that's money. Sometimes it could be money that you waste. I don't like my clients wasting money because they work hard for it. So I
Yeah.
protect that money like if it was my money. So I give them all the options, and what entails, how much is affecting their monthly payment if they buy 1 point, 2 points, and what that looks like.
Okay. And what do you feel is one of the most common questions that come up, especially like right now? I mean, how many people are asking you, did my interest rate go down? Did my interest rate go
Yeah,
down?
so right now the calls that we're getting is like, can we refinance? And we've been in contact with our clients for probably a couple of months already, planting that seed because
To
no,
refinance?
yeah, of refinancing. Because nobody knows, nobody has a crystal ball to predict rates. Even people that are smarter than way smarter than me, and they
Yeah,
have been getting it wrong for the last 3 years. So, because nobody can predict
right.
what these markets are doing. So basically, that's the call. Is it time? So what I'm telling my clients is send me your mortgage statement. Let's do a deep dive of what rates are doing right now, and if it's the time to refinance, or should we wait to see where the market is going. And everybody's situation is different. Some of my clients have gone to higher rates because they need cash out. They have plans. So we just closed one where she went back to a 7%. But why? Because they needed the money to pay out another house that they had bought in DR, in the Dominican Republic. So that's why the conversation should be more about what your plans are, why you're trying to refinance, and not so much about rate. Unless you are trying to cut the term of your mortgage, lowering the payment, then it's about rate.
Right. And so what I hear you saying is it's always going to be case by case. Every
Yes.
situation, every scenario, every plan is going to be different based on, like you said, maybe they were going to refinance at a higher interest rate, but that's because they needed the money now.
Yeah, people's life is complex, right?
Yes.
So some people will not refinancing. We see debt is in a, like right now, debt is so high in America.
I've been hearing more and more about that.
Trillions, yeah, trillions in debt, in credit card debt.
Yes.
So what's going to happen is that we can do a restructure. Some of my clients is like, yeah, you have a 2%, 3% rate, but is that doing anything for you when you are paying 29 in your American Express, for example? And
Right.
you have all this debt that is piling up. At the end of the day, you're paying more interest, even that you have a 2 or a 3 on your mortgage. So we do an analysis, very sincere. This is the time, or this is not the time, and this is why you save. Another conversation that we are having really now, and I want to touch on this because I do a lot of IT borrowers and loans where the borrower might not have a social security, but they have a tax ID.
Yes.
I have clients in the double digits with their rate, and we are now refinancing these clients that the rates have gone down, that they can get, so in some instances they can go probably 1.5, 2 points down, because
Wow.
some of these clients, their immigration status had changed,
Okay.
and now they have, some of them had their citizenship or a green card or even a work permit. Those three qualify you for the same rate that an American citizen will get. So if you are in the double digits and you were an 18 borrower, it's good that you reach out to your mortgage professional. And if you don't have one, you can reach out to me. I will definitely take a look at the situation, because we are seeing these borrowers being able to benefit from this.
Very nice. So if you look in the chat, there's actually a booking link. If you want to book a one-on-one call, click on there, put in your information, and Jessica and I will schedule with you. Um, I was going to go back to double-digit interest rates.
Yeah.
So what is the highest? Because I'm sure there's somebody out there watching right now, and they're like, 6% is so high after they saw 3% in COVID or less, right?
Yep.
So let's shine some light on what is a double-digit interest. What are you
Yeah,
seeing?
no. So right now we have a loan in the pipeline, in our closed pipeline, right? A past client, and he's at a 12%. He's an 18 borrower, and he's at 12%.
Wow.
We're refinancing one, and I bring this to the attention because I haven't seen a lot of people talking about that, but I start reaching out to my clients, especially the 18 ones that were in the double digits, and
Okay.
having that conversation to see if their immigration status had changed. And one of our clients, he just got his work permit and his social, and we are bringing him from a 10 and a 10 and a 10%. Now we are bringing him to a 7.5.
Wow.
Yeah.
That's
Yes.
amazing.
So I know there might be people listening to us out there that might be in that situation, and they should reach out and just have a conversation. Let's just take a look at the mortgage statement and see if we can save them some money, and we can change the type of loan that they had before.
Awesome. Thank you, Jessica. And I want to thank everyone for joining us today. We hope this gave you clarity on how interest rates work and what it means for your buying or selling journey. Now let's open it up. This is your chance to ask us anything. You can unmute yourself or drop your questions in the chat, and Jessica and I will do our best to cover all of them.
Don't be shy. And another thing, si nos está escuchando alguien que habla español, español es mi primer idioma, so le puedo dar la información también en español.
So what are the first steps to getting pre-approved?
The first steps to get pre-approved, hopefully calling me. And I will have a conversation with you on what your plans are, where you're looking to buy, what type of income, what type of property. We will request a credit report. We can do a soft pull in the meantime, so we don't affect your credit, even that the credit report doesn't affect your credit. But if you are concerned about that, we can do a soft pull. We take a look at your credit, income, assets. One of our underwriters can take a look at the file. We offer that service, so that way you are out there buying if you were buying cash. And we will give you what are your options in terms of programs that are out there. Anything that is out there. We do from Sonny Mae loans that are from the state of New York, all the FHAs, the VAs, and also investors, loans from investors, the DSCRs, the P&Ls, the bank statements. So we will give you a complete consultation on what is available. And that should be the next step. So that way you're not window shopping. When you go to Natalia, we have a plan in place, and she knows exactly what can you afford, what you are comfortable, right? Because it's about that payment. Are you comfortable with that payment? And she will be able to find you that house that meets that criteria.
Yeah, that's one thing I always tell clients from the beginning is let's get your approval done. Let's speak with the lender, because at the end of the day, would I like to get $1 million sale? Of course.
Correct.
I've also had those clients that got approved for that amount, but the monthly payments, they want it to be closer to, borrowing 900,000 or 800,000, whatever the number is, whatever makes sense monthly for them, where they can afford the mortgage and also live comfortably, right? And still have money in the bank instead of just wiping it all out.
Yeah.
I let them know up front, let's do this. Let's not start looking before we know what your budget is. And, I don't want them to fall in love with a home that at the end of the day, the monthly payments don't make sense for them.
Yeah, absolutely. We want our clients to have the house for years to come, for how long they want this house to be theirs, right? So it is important that we sit down and we have a conversation, because everybody's goals are different. And
Right.
when you break it down in numbers, sometimes it opens people's eyes. Maybe I want to change the neighborhood I'm looking at, or the type of property that I'm looking at. And that's where working with a agent that is as passionate and for customer service like that Natalia is. I love working with you because we are in the same page when it comes to our clients, making sure that they understand what they're doing. This is a very, very important step in their lives.
I completely agree with you. Somebody in the chat wrote, I heard rates are going down further. Should I wait? I want to sell my house and possibly get a small mortgage. Natalia, do you help with buying out of state and selling here? That is a yes. Do you want to answer the first part, Jessica, on waiting for them to go down with interest
Well,
rates?
for me, if you have the right house in the right neighborhood that you want to be, the numbers make sense. Why are you waiting? Because that house is not going to be there. That opportunity might not come. Just to tell you a little bit, when I bought my first house here in the United States, my first mortgage was a 7.75. That was interest only, and that was an adjustable mortgage. And the second mortgage, because back then in 2006, you could do 100% financing. My second mortgage was a 13%. So
Wow.
it was a huge, but what I knew was I don't want to pay rent. I want to own. And
Right.
later on, I refinanced that mortgage, combined those two mortgages and refinanced it at a 3.6 to 5. So rates change. We've been through cycles. We saw COVID with the threes. Before that, I saw the threes, maybe probably around 2011, 2012. I refinanced some mortgages in the threes. So that doesn't mean, but my point is that nobody knows what is going to happen with rates. And you shouldn't let rates dictate your future and your financial, especially your financial picture.
Yeah.
So that's my answer to that one.
I agree 100%. Because at the end of the day, you're still paying. You're either paying somebody else's mortgage and rent or you're paying your own,
Correct.
right? And I don't think a lot of people think of that way. Like they don't think about they're still paying rent and that is money they will never get back.
Yeah.
And rent is not cheap in New York City,
Nope.
you
Not
know?
at all.
Even at 2,000 a month in a year, that's already 24,000. That's 24,000 you could have put into your own dream home,
Correct.
right? Your own mortgage.
Your own
Um,
mortgage and also the tax benefits at all, because if you are
yes,
in a high tax bracket, that rent, so not only your landlord is making a party with you, the IRS is making a party with you. I was there when
right,
I got here. I'm like, I can't, I need to buy something. Even that rates 2006 rates were like worse than they are right now.
right.
So I think we have another question on the chat.
Yes. What are the risk of waiting for rates to drop further? So I guess it ties into the previous question. I think another thing as well, part of the risk of waiting is everybody else might be waiting too, right? So when interest rates drops, that just means the pool of buyers is going to widen as well, which means more competition. We all know what happened during COVID. When interest rates dropped, all these buyers came out and they created bidding wars and people were putting in thousands, 10,000s, 50,000 over asking, offers. So I know how frustrated buyers were during that time. I wouldn't want to go into that. I would rather buy now ahead of the game. And like you said, further down the line, maybe look over refinancing, but start now.
Yeah, you secure that asset, and once it's yours, nobody can take it from you, right?
Yeah.
So you start reaping the benefits. Even it is about the numbers. It is very important about the numbers. If you can swing that payment is not going to change drastically your lifestyle. And you can keep making those payments. There's no reason for waiting.
Yeah. Here's another question for you in the chat. Oh, wait, where'd it go? What states do you cover, Jessica? Do
So
you have no docs stated income programs?
Yeah, so US Mortgage is a national lender. We are licensed in 49 states and Washington, D.C. The only state that we cannot help you if you're going to Hawaii. So sorry, Hawaii, but any other way, any other place in the nation we can lend. And yes, we do have they call it stated, but in reality, those will be the DSCR loans, which are for investors. What that means is that it's going to be an investment property. You're not going to live there. And we are not going to require taxes or income documents because we go by what the property produces in income. What is the income that you are going to get from that property? Also, I have a lot of self-employed borrowers. We do profit and loss, which is a document that your accountant will prepare. With some of my clients that might be bodega owners or Uber drivers, we can do bank statements. So we just look at your 12 or 24 bank statements and we take the money, the deposits that is going there, and that's how we do your income. So there's a lot of programs out there. My goal is just to present you, this is everything that is available to you. You make the decision on what works to your specific situation.
Yeah, it's always nice to know what your options are, and that's why it's important. Again, we dropped the link in the chat if you want to book a one-on-one call. I see something else in the chat. I keep hearing different things about putting more of a down payment or less of a down payment. What's better? I kind of want to have more money on hand in case of anything once I buy. What is the least or recommended amount for a down payment?
So it will be, again, it will be dependent on your particular situation, right? So some of my clients, they're like, I want to put 20% because I don't want to pay PMI. That's a very common one. I don't want to pay PMI, but I've been able to show some of my clients, okay, depending on how much cash you have available, because like Natalia mentioned, it's good that you keep some reserves. We don't know what can happen. So I'm not a fan of my clients depleting all their savings and accounts. We can say, if you're concerned about paying PMI, there are ways on conventional loans, there are ways that you can put less down payment and don't pay the PMI monthly. So that's why my approach with my clients is a consultation. Let's just see what is your particular situation and what do you want, where you want to be. And these are the steps, these are the options that you have. So that one is one that it will be really depending on the situation of the client. I have had clients that when our first conversation, they want to do 20%. We have done 15%, 10%, and pay the PMI at closing, if that makes sense. So that's an option. We can work on different strategies depending on your particular situation. So that way, if you book a one-on-one consultation, we can really go through the meat and potatoes, right? And see what is your particular situation when purchasing, what are your assets, what are you bringing home, just a complete consultation. That's what I'm trying to say.
Yeah, I love it. Thank you so much, Jessica. Thank you all for joining us this evening. I want to congratulate you for taking that first step, which is just getting the knowledge, right? Getting the information on where to get started. And if you'd like to go deeper, like I said, we're going to send out as well the link to book a one-on-one appointment. So Jessica and I can know your individual plan, not just let's buy a home. What's the actual plan to put in place to make the whole transition smooth, whether you're upsizing, downsizing, whether you're going from renting to owning. Let's book that one-on-one time to make the right plan for you and your family.
Absolutely. That's the goal, Natalia.
Thank you, Jessica. Everyone have a good night. Thank you again for joining us.
Thank you. Bye.